My name is Andrew Stotts, and I want to welcome you to this presentation from one of our Valuation Masterclass Bootcamp graduates. Her name is Padmaja, and she is going to be presenting about Micron. What a pertinent story for right now. By the way, if you want to join the Valuation Masterclass Bootcamp, we start in 67 days. I hope to see you there. All right, let's get started.
Hello.
Padmaja, how are you? Are you ready to go?
Yes.
I'm excited for this because you've done a lot of work on this company, and it's a company that everybody's interested in, uh, and it's called Micron. And so I pulled it up on the screen so everybody can see it. So I think I'm gonna exit in just a second. Are you ready to go?
Yes.
Okay, so let me exit. You can start now.
Yes. Hello, everyone. My name is Padmaja, and today I will be presenting my report on Micron Technology, which is a part of one of the world's three major semiconductor manufacturers alongside Samsung and SK Hynix. Right now, Micron sits at the center of one of the biggest investment themes of the world, which is, of course, artificial intelligence. The company is generating record profitability, revenue, and unprecedented demand for its AI memory products. So, at first glance, this definitely looks like a straightforward buy. However, after analyzing Micron's business further, the industry, as well as future prospects, I have arrived at a sell recommendation based on a target price of 840 US dollars, which implies an 11.5% downside based on the current market price. So, the key idea that I want everyone to remember throughout this presentation is that this is not a sell because Micron is a weak company. Micron is an excellent company. However, an excellent company can still be a very expensive stock. So, before diving into the analysis, let me briefly summarize the entire investment thesis. Right now, Micron is benefiting enormously from the AI demand. Its HBM production for the year 2026 sold out long back. The revenue is growing rapidly, its margins and cash generation are extremely strong, but investors are not paying for today's Micron. They are paying for a future where everything is perfect, where the AI demand remains extraordinary, the execution story remains flawless, and profitability remains near record highs. I believe that these expectations leave very little room for disappointment, which is why my recommendation rests on four key concerns: the overly optimistic AI expectations, execution risk highlighted by the HBM for delay, the hidden constraints of the CHIPS Act of the United States, and the structural cyclicality of the memory industry. So let us begin with the AI demand and whether the AI hype is justified. So the AI demand is absolutely real. There's no questioning that. Micron's entire HBM production for 2026 is entirely sold out. And hyperscalers like Amazon, Google, Microsoft, and Meta are expected to spend nearly $700 billion on AI infrastructure. So, my concern here is not whether AI succeeds. It is whether investors have become too optimistic about how long this space can continue. Memory has grown from roughly 8% of hyperscaler AI spending in 2023 to nearly 30% in 2026, making Micron increasingly dependent on AI capital expenditure. History gives us a very important lesson. During the dot-com era, the internet ultimately changed the world, but investors priced in that success far too early. AI could follow a similar path. If hyperscaler spending slows even modestly after 2026 or 2027, Micron's earnings could be far more vulnerable than today's valuation suggests. The second story is about the HBM for stumble, and this is the second pillar of my thesis. HBM is one of the most profitable products in the semiconductor industry, and it is expected to contribute roughly 24% of Micron's 2026 revenue. It also has a very high margin, and it is a differentiated product for Micron. Now, what happened was that in late 2025, there were yield and performance issues with the HBM4, which caused a delay in its launch. The result of this was that it was just then that NVIDIA had announced its Vera Rubin platform, and roughly 70% of the supply went to SK Hynix and 30% to Samsung, while Micron received virtually no allocation. Considering that each AI rack contains approximately $2 million worth of memory, this costs the company a lot of money. When investors are paying premium valuations, they expect near perfect execution. And in such stories tell us that even though Micron has recovered from it, it might still be behind companies such as SK Hynix, which have been in the HBM for production for over 12 years now. This stumble reminds us that the execution risk is still very real. The third story is about the CHIPS Act. The CHIPS Act of the United States provides Micron with up to $6.1 billion in government support, about 44% of its cash balance and 57% of the total debt. This is a very significant opportunity. It supports domestic manufacturing, lowers upfront capital costs, and strengthens Micron's role in the US semiconductor supply chain while aligning with national priorities around technological independence. But my takeaway is very simple. The CHIPS Act is not just free money, it also introduces significant execution risk, compliance obligation, and reduces management flexibility. To access these funds, Micron must meet very strict requirements around investment, workforce development, and reporting. These constraints can limit capital allocation flexibility in a highly timing sensitive industry, and government backed projects may face delays, cost overruns, or policy changes as well. Now, let's step back for a minute and look at the industry that Micron operates in. The semiconductor industry is rapidly expanding based on AI driven demand, but it remains highly cyclical, making Micron's recent exceptional performance impressive yet potentially already priced in. The recent quarter performance as well has been outstanding. The revenue reached up to 23.9 billion US dollars, up almost 196% year over year. The gross margins rose as well, and the ROE and ROIC are among the strongest in the industry. But today's valuation assumes that these results will continue forever. So, what could prevent that? Let's look at the constraints. Although AI creates major opportunities, Micron still faces key constraints. Capital is a minor constraint because even though the memory manufacturing industry is highly capital sensitive, Micron is expected to have significant cash reserves as well as the funding from the CHIPS Act. Operations Operational risks make operations a major constraint, as seen with the HBM4 delay. And the market is also a major constraint as the memory market is highly cyclical, with revenue falling from 30.8 billion US dollars in 2022 to 15.5 in 2023. People, on the other hand, are a very neutral constraint because Micron invests a lot on training and R&D as well. In short, the AI drives growth, but capital demands, operational risks, and cyclicality continue to limit Micron's expansion. So, what does drive Micron's business? Despite all of the excitement around AI, roughly three quarters of the revenue still comes from DRAM, while NAND contributes about one quarter. Micron is still fundamentally a memory company, meaning that long term performance continues to depend on memory pricing and industry cycles. That perspective is reflected in the next framework. we can see that momentum is clearly the strongest category, supported by explosive revenue growth and earnings. This framework tells a very clear story. Momentum is exceptional, but valuation and risks haven't improved to the same extent. Now, let's look at whether the industry itself supports this optimism. When we look at the Potter's five forces, we can see that Micron operates in a very attractive industry. There are only three major players which dominate the memory market, and the barriers to entry are enormous. However, memory remains largely a commodity, which means that when supply increases a lot, prices fall for everyone. So while the industry structure is attractive, it does not eliminate the cyclicality that defines the memory business. The company itself, however, is well managed. It is led by Sanjay Mehrotra, who is the chairman, president, and CEO. In terms of the world class benchmarking framework, Micron has delivered one of the most impressive turnarounds in semiconductor industry. In just 2 years, it has gone from one of the worst performing performers to one of the strongest globally in profitability and earnings growth. It's a remarkable turnaround, but I believe that the market has already awarded this success. Now, let us see whether the financial projections justify today's valuation. Rather than reviewing every line item, I'd like to focus on three key messages. One, revenue is forecast to grow significantly, and free cash flow becomes substantially stronger over the forecast period. Debt declines, liquidity improves, and shareholder equity continues to increase. In short, the financial statements describe a very healthy business, which makes the valuation even more important. Over here, we can see that the PEG ratio is just 0.11, which would normally suggest a very attractive stock. However, I would like to say that PEG can be a very poor and weak metric when it comes to companies operating in the semiconductor space, as the G part of it can be artificially high during peak cycles, which is why we have primarily relied on the discounted cash flow analysis. Using an FCFF model with a weighted average cost of the DM
We
will
may have a
ultimately
little interruption there, but
$303
boy,
per
it's been
share.
interesting so far. And
Importantly,
I think she's
every
gonna hold
valuation
on.
method
Let me
produces
let
a
me get you.
value
Let
below
me
the current price.
Fatma, can you hear me?
Yes, yes.
Okay. You cut out. So why don't we start from
Yeah.
this intrinsic valuation calculation page,
Okay,
because
sure.
it's darn interesting so far. So
Yeah.
keep going.
Okay, yeah.
Yeah.
So shall I start again?
Yes. Just start right here
Okay.
on this page.
Yes, okay. So using the FCFF model, we have assumed a risk-free rate of 4% and a market equity risk premium of 6% for the US market. This gave us a weighted average cost of capital of 10.7%, based on which an intrinsic value of 840 US dollars was estimated. For comparison, the FCFE model yielded a price of 734 US dollars, while the DDM approach gave us a price of 303 US dollars per share. What's very important to note is that every single valuation method gave a price which is far below the current market price of 940 US dollars. So, in short, Micron is a fantastic company, but today's share price has already assumed sustained AI demand, flawless execution, and continued record profitability, which is why it's very important to look at the risks which dominate Micron. One is the memory cycle downturn and oversupply. DRAM and NAND markets remain highly cyclical, and rising Chinese capacity could pressure pricing and margins from 2027 onwards. The geopolitical risks are enormous. Escalating China and US tensions and export controls as well could further limit market access and disrupt Micron's supply chain significantly and hinder its growth trajectory. The capital expenditure execution and yield ramp risk is also significant as heavy investment in multiple new fabs, which are taking place in New York and Idaho. The HBM capacity introduces new risks around delays, yield issues, and rising depreciation, which would impact the returns, and the valuation is stretched at peak cycles. Micron is priced for a sustained AI super cycle, leaving very limited margin for safety if the industry conditions normalize after 2027. However, I believe that the greater risk lies on the other side, which is that today's valuation has assumed that every single thing about Micron and the market goes perfectly. If even one of these assumptions prove to be too optimistic, the downside risk could be significant. So, to conclude, Micron is a high quality company operating in one of the world's most strategically important industries today. But successful investing is not simply about identifying the greatest companies of today's times. It's about identifying great companies at the right price. My analysis suggests that Micron's current share price already reflects an exceptionally optimistic future. For these reasons, I believe that the risk reward has become unfavorable, and I maintain a sell recommendation with a target price of 840 US dollars per share. Thank you.
Excellent. Let's go to some ratios. We've got some questions that have come in, and I'm
Yes.
going to get to those in a second.
Okay.
But let's go to the ratio page just so I want to
Yes.
understand
One
a couple
second.
things here.
Yeah. Yeah.
Okay, let's look at this first. What I'm kind of interested in, the first thing is the debt. You know, you talked about how the CHIPS Act and all that.
Yes.
And you talked about the constraints of it. How much money did they get from the CHIPS Act? Does it have any meaning to their balance sheet, or what do you think? Like if
It
I'm just looking
is.
at the net debt to equity right now, I don't just see much of an
Yes.
impact.
Yes. So I think just let me go up to this slide. Just 1 minute. Yes. So the value is about $6.1 billion, and the most significant part of it is in debt, which is 57%. So a lot of this is going to go in the construction of the fabs in New York and Idaho. So it is a significant amount, I would say.
And it's just going to come on the books as they're moving through their construction.
Yeah.
So can we look at the liability side of the balance sheet then? Just
Yes.
go up a couple slots. Let's just see. And it would show up as long-term debt.
Yes, I think.
Okay.
Yeah.
So we can see some increase in long-term debt, but not much.
Yes.
So maybe
Not much.
okay. And in fact, I'm just looking, I see that your long-term debt expectations are falling.
Falling. Yes, in 2030.
Okay. So either you're saying to pay that down or you haven't fully booked it in there yet from their expansion.
Yeah.
Let's look at the
Yes.
asset side of their balance sheet. Yeah, so let's look at net fixed assets. So you're saying that it's going to go from
Yeah,
47,
it's
about
increasing.
double by
Double.
5 years from now for net fixed assets.
Yes.
And your expectations on cash, pretty high. You know, it's going to be
Pretty.
pretty cash generative. Okay, let's
Yes.
just go back to the ratios for a second. And I just want to see the growth. So go to the next page. So revenue growth, just incredible for, you know, the first quarter at 196.
Yeah.
So let's go. Okay, so I think I've got a good idea. Let's go to your free cash flow now, just to get a picture of the
Yes.
actual free cash flow that you're forecasting. So,
Yeah.
yep, yeah, right there. So your capex is not even double, actually. Interesting over you know the next 5 years, but of
Yeah.
course it's really all about the cash NOPAT, which is just accelerating like crazy. It's up almost 4 times in 5 years. So really what you can see in your forecast is the same thing probably that most analysts have, which is they have an expectation that the company is going, you know, is going to maintain this high level of revenue. So let's bring in the first question from Christiana. She says, should we be valuing Micron based on sustainable earnings power, or are we over relying on this temporary semiconductor upcycle?
Yes, I think, right now the upcycle is significant, and that's why the price has been enormous. And as we saw in 2022, the semiconductor industry, the revenue was a lot, and it fell just 1 year after that. So I think we should certainly consider all of the fundamentals instead of just looking at the upcycle right now.
Okay. And there's another smart guy here. His name is Momin. He's got a question for you. He says, why step in front of a freight train by selling right before the Rubin launch when Micron controls the biggest bottleneck in AI?
Okay, could you repeat the question?
Yeah. So, in other words, he's saying the share price is going to go up, up, up
Yeah.
because of Rubin launch and because of the bottleneck. So, why sell now?
So, a lot of this analysis is based on the fact that even in 2025, when NVIDIA's Vera Rubin launch had happened, there were yield and execution issues. I think only about 70% of the chips produced by Micron were actually effective and usable. So I think such execution issues could happen, even though they have sort of perfected it now and the production for 2026 has sold out. But SK Hynix has been operating in this space since 2014. They have an advantage of almost 12 years. So that's the reason, I think.
And it seems like sometimes the market's so crazy that, when a company
Yeah.
trips up, they don't mind, it just
Yeah.
keeps going and they buy more.
Yeah,
Let's
exactly.
yeah, let's look at another question coming from Dang from our current boot camp. He said, is the change of the nature of HBM from cyclical towards something more permanent possible?
Definitely, it is.
Mm.
And
And
HBM4 is a differentiated product when it comes to NAND and DRAM, which constitute a lot of the products that Micron sells. They are same across all of the three companies, but Micron differentiates itself through HBM, so it is definitely possible.
okay. Here's another from Christiana. She says, if Micron missed the early HBM4 launch window, how confident are we that it can still gain meaningful market share against SK Hynix and Samsung?
Yes, that's the reason why I'm not very confident about it. But when we saw, like in 2026, its entire production sold out, and Nvidia was one of its biggest buyers. So there is still optimism in the near future, but after that, in the long term, I'm not quite sure.
Okay, and I think this is your final question for a moment. If management continues to state that supply remains extremely tight, what specific catalyst are you seeing that will crush their stock price and justify stepping out on the stock right now and saying
I
sell?
think yeah, it would be during an industry down cycle, I would say. Because
Okay.
as long as like hyperscalers continue investing as much as they are, Micron will still remain a very big supplier.
But is it just the case that the share price has already captured all of that, and so there's just no way for it to move further? Is that what you're saying?
Yes.
Okay. All right. There is one last comment here. It says, "Great presentation." So, how do you feel? That was a good one. How do you feel about that report? You worked a lot on
Yeah.
that.
Yes. I feel pretty good about it. Yeah.
How many hours do you think you worked on it? How much time did you spend on it?
I think continuously I spent about 2 weeks. And then as there were additional feedbacks and comments on the report, then almost like a month, I would say.
And tell us about your background when you first joined the Valuation Masterclass Bootcamp. Could you do all this, or what
No,
level
no,
were you
not.
at, or what did you know? I mean, that's quite a
Yeah.
big
So
report you made.
actually, I'm studying economics, and we have studied financial statements and all, but not to this level. whatever I knew was very like stuff that I had read. When I came to the boot camp, it became very structured, and it was definitely the most learning I have ever had in my life. And even I remember for the selection, I had to make a report on Fastenal. And I just, pulled up the statements, I made a few charts, and I tried to do the best I could. But afterwards, during the boot camp, when we had to make an entire report on Fastenal, I saw just how, small and not comprehensive my earlier report was.
Yeah, and as you progress through the boot camp and you're doing, your next report and your next one, it's like
Yeah.
you look at your first report. By the time you get to your fourth, you're like, wow, that really
Yeah.
wasn't as impressive. I thought it was like the most amazing thing, but then I realized there's a lot to it.
Yeah. Yes, definitely.
It's one of the things that I like to say is extreme attention to detail. When I was an analyst and I was writing, I was really intimidated when I was a young, guy. And I just didn't want to get caught out with some mistake or something like that. I just felt like that would be awful. And so I
Yeah.
really, really, worked hard to make sure. And one of the things I used to do when I was writing a report is when I'd finish it, I'd lay it out on the conference table, the conference room table, and just look at it and go through every single word and think about it from the perspective of the reader. And I think that made me a better analyst and made my reports, I think, more coherent. But yeah, I thought it was great, considering that, it's not a company, it's not like you're an analyst covering it for the last 5 years. So well done.
Thank you so much.
What's next?
So right now I'm working on Palantir. So that report will be ready in a few days. Yeah.
That's if Micron wasn't hard enough,
Yeah. Exactly.
Palantir is going to be interesting.
And
Well, I look forward to hearing your presentation, and also
yes.
let's see if we can get you to come back live and talk about it like you have here, which is great.
Yes, definitely. I
Um,
would love to.
yeah, good. I'll be with you in just a second, but I'm going to take you out of this here, and then I'm
Yeah.
going to just wrap it up. So well done.
Yeah. Thank
Wow, that's pretty impressive. When you consider she's studying economics and not, in this area, and she's able to pull together that report. Of course, in the Valuation Masterclass Bootcamp, we guide you step by step from zero to be able to produce a full report like that and present it. The next bootcamp starts in 67 days. You've got 7 days to get a massive discount of 1,900, and just scan the QR code or go to valuationmasterclass.com, and you can use the coupon code VMCBC Live. My name is Andrew Stotts, and I sure hope that you create